Hey Doug, here we go into another round of what's happening out there with nSights and crypto. How are you doing, Doug?
It's Friday.
It's
Yeah,
Friday,
yeah,
right?
yeah. And so, another good week, lots of development and programming. And, we had a conversation this morning with one of our AI programmers, and I'll let you touch on that because it really did, I think, kind of bring this call
Yeah.
to attention. So, and we both had to think about it. And what was so interesting is that without you saying it, you came up with the same answer that I gave him, and I'll let you talk about that a little bit.
Yeah. So we were on with one of our programmers this morning and working on our AI tools, and he's very excited about trading. And it was fun to hear him show us. I mean, he shared his screen and showed us the coins that he's following on his own as
A
he learns
list. A li-
about trading.
Yeah,
He's in this spot where we all start, right? I want to trade all the coins all the time and get all the money. Uh,
right.
yeah.
He's like a kid in the candy store. I mean, he was just like, "Ah, nah, nah, nah." Yeah, I mean, he was just all over the board. Well,
Yeah.
we could do this and you could do that, and you've been trading so long, and
Yeah.
it was
It
it's
was
fun
fun.
to see his enthusiasm.
It was really fun. And one of the questions he asked Doug was he said, Doug, are you a swing trader or are you a day trader? And my initial response in my head was, well, he's neither. But what is he? I know in the past you were a swing trader, you were a
Correct.
day trader, you've
Hmm.
done it all. But right now, working with nSights, neither one of those terms work. So the first thing I thought would be good, Doug, is if you go ahead and explain, because we've got a lot of different kinds of people who come to these calls. And why don't you explain the difference? What is a swing trader and what is a day trader? And then we can go into why nSights traders are neither.
Sure. Well, as I start with the day trader, right? You think of a day trader as somebody that's trading very short term, usually within a day, 2 days at the most in a position, and they use very tight stop losses because they're trading leveraged in most cases, and they're really counting on shorter movements. They're really trying to make in forex, they're trying to make a certain amount of pips per trade, and usually those are shorter movements. A swing trader, which I I was a I did projections for a company out of New York that was a swing trading company, and so they would use my and Brendan was involved in this also at that time, if I remember correctly. Um, they would use our positions. We would say, okay, this is the barrier, this is where we're getting in, and this is where we'd set your stop loss, and this is where we'd set your target. They were much bigger stop losses. They had room to move, right? They had a little bit more breathing room, and they were much bigger targets. So the swing trade is a much longer trade, and it's going for more profit. It's usually trading a smaller percentage of the account because they give it a larger stop loss, and so it allows that trade to breathe, right? And so what we do is neither one of those, Deb. So,
Right. And even, you talk about stop loss, and a lot of people might not understand what that is. And basically what you do is you say, allow my trade to go down a certain percentage, but when it hits this number, this price, I need out of the trade.
yeah,
So just sell it at a loss,
yeah, cut,
which
cut, cut the bleeding.
cut the bleed, stop the bleeding. It's in my world, because I only understand trading through you and through the
Mm-hmm.
tools that we've built, right?
Mm-hmm.
In my world, I can't fathom ever wanting to stop the bleeding, because for the most part, most of the coins that we trade, they're constantly, and I talk about this all the time, it's constantly a roller coaster. Or I like to, it's like the tide coming in and out, right?
Mm-hmm.
It's ebb and flow. It's
Right,
constantly going up and down. When you can trade those kinds of coins, there's no reason to panic, right? There's no
right,
reason to jump out of the trade. And especially when you have money management tools, you just use a tool and continue on in that trade as it's going down.
Yeah.
You get excited the further it goes because the more money you're going to make coming back up. So
Hmm.
stop loss, that's what stop loss is all about. Stop the bleeding.
Right.
And
Stop
most
the
traders have to do that, right? Outside of us because they're trading leverage.
leverage. And you think about it, and I never really thought about it until I just said stop the bleeding. You know, you get a scratch, you put a band-aid on it, right? You start trading leverage,
Mm.
it's no longer a scratch. It's like half you
You
you got
lost
a
an arm.
you got a gash, and you need to stop the bleeding because you're going to bleed out. And that's really what they do. They margin out their accounts, right? And so if they don't trade with stop losses, they margin out. And so in most cases, they'll take a number of hits on the stop losses. They'll be negative in their account. Then they get one win or two wins, and then they're back to almost even or slightly profit. Then they take a bunch of more stop losses and hits. That's why 99% of all traders lose. And it's why at best, even the top traders are usually at break even.
Yeah.
Now, some of them may have a good year, but over time, it's like going to Las Vegas. The house wins. Anytime you're trading leverage, the house wins. And so, it's just, we don't do that. And so I told him we were a different type of trader, Deb. And what did I tell him?
Well, we are position traders.
Right. And we use money management to manage the position. And so, and you and I were talking, and I said, I don't think I've ever heard anybody talk about being a position trader, right?
No, no. And it makes, when you said it, and in fact, I didn't hear it on the first call. I heard it on when we were talking about going just that whole scenario.
Mm-hmm.
Um, when you said, we're position traders, it woke up a part of me that is, I think I can start to explain better or help somebody else understand what we do.
Mm-hmm.
We're position traders. We get in and then we watch. Actually, we've built nSights to get in
Yes.
according to my rules, however I want it to get in. And then
Yes.
we've trained nSights to watch that position and to do what's necessary with the money management tools that we've set up to move that position
Mm-hmm.
around so that we can get out in profit. It's brilliant. We are
Yeah.
position traders.
When I used to teach Forex, I used to teach entry is everything. And so you have to time the correct entry because you're trading a 2 pip, 3 pip, 5 pip stop loss. And so if you don't nail that, then you're going to get stopped out. Then there's other problems. If you're if you're too close to a bottom swing point or a barrier that the brokerages can see, they can see everybody's entry, and you're in that same block with everybody else, and the brokerages and the houses know where those stop losses are. It's called running the stops. They'll actually drive the market down, hit the stop losses on everybody, take the money, and everybody that's been in trading knows this, right? I've seen it where one brokerage will drop 2 pips below the rest of the market. You'll call the exchange desk and say, hey, the market didn't go there. And they'll say, ours did. And simply what they did is ran the stop losses. So they see where everybody's stops are. And if you're in that sweet spot where, 1,000 other traders are, it's easy money for them. And so, it becomes a different game, and entry is everything on that side. When we trade, entry is important, but by far not everything. Money management is everything. And so it changes the game completely
Yeah,
when you approach it that way.
I love it. Well, like I said, I think it just makes perfect sense. Position traders, we're position traders. I'm excited for you to kind of walk through the process to help somebody see how in nSights we are position traders. I'd like to kind of, flesh that out a little bit and help
Okay.
our users see it in
Uh,
nSights.
sure. So I, Injective is a coin that we've been trading, and it did really good. We've talked about it on other calls. It's had a lot of up and downs. It's really a mixed bag, and probably it has probably one of the best examples for us to kind of look at what we've done in the past, Deb, and then what we might do with maybe one or two of the trades today. But let's bring up Injective, and then I want you to explain, the dots on the screen that they see, because
Sure.
we have these dots. I've talked about them. I don't think I've ever really taken time to explain to people what the dots are. So let me get Injective up here. And let me crunch that up, and then let me share my screen.
Okay. Yeah, this is good stuff. So, yeah, I was gonna talk about something else. So as we're looking here at the chart, and go ahead and remove that blue box at the bottom that tells, yeah. So as we're looking at this chart, we see a lot of gray and blue. And to be honest, those are my absolute favorite colors on the chart, because what gray means is we got into a trade that has closed. The blue shows where that trade closed. So if you start at the very left-hand side and point at the first gray, that was the first trade taken on this chart. And you can see we went down, we went up, we went down, we came back up, and it hit the sweet spot where Doug said, when it reaches this profit percent and add my fees, don't make sure you include all fees that I paid for all trades, then sell. And it sells it turns the first dot, which was green when it was open, it'll change it to gray when it's closed. Blue is beautiful, right? Blue means sold profit, sold in profit, sold in profit. I love it. All right, anytime you see a black dot, it means that that trade at one time or currently had a cost average trade that helped it come down in price so that nSights could get out in quicker in profit. And I'll explain that as we go further. Doug's going to go through some of that today.
Yeah, this is a good example of it because it's still open, Deb.
Yes, yeah, when it's
So,
open, you can see where it actually filled. So this trade that's dropped, it had filled at the top, right? It had filled right
mhm.
there. And then Doug did a cost average there, his first cost average, which brought the price down, and his second cost average, which brought it down all the way to where it is today. And what that means, guys, is instead of one trade positioned at the top, Doug was able to use, or the system automatically used, the money management tools that we have, and it took a trade at that deeper price. When you take a trade at a deeper price, if you're using the same amount of money for that second trade, it you're getting more tokens than you did at the top. You get a lot more tokens. So this is weighted cost average, right? Use the same amount of money, but you get a lot more tokens at the bottom. That you then take those two trades and you can divide them. You can divide your first trade, or sorry, you can take all the tokens that you accumulated in those two trades and divide it by two. That starts to bring your price down. Plus the weight of the second one is a little bit more weighted because you were able to get more tokens. Anyway, brings your price down so that as the market goes back up, it doesn't have to go back up as far to still get you out in profit. So Doug did something, or the system did something even better, which was when the price dropped even further, it took another trade. So that dropped his price down even further. So right now with two trades against it, he is at a what price? It'll sell just above 34, it looks like, 33. So it'll sell somewhere above 33.578, about 5% above that to get him out in profit. And instead of having to wait to get all the way back up to the top, which was 49, about 50,
Yeah.
50 something to get in profit. You can see using the tools, you can get your price down much further and get out of your trade more quickly.
And Deb, with more money, right? So
And with more money,
up
sure.
here was like a $50 trade. Up down here is $150, $200 trade. We'd have to look it up, maybe 250. Depends on how much I put in the cost average.
Yeah,
But but what it does is, and people think we're crazy, Deb. We love the down markets
yeah,
because we're able to take our position and use money management, get more money in the market, and make a higher return on our investment because we got more money in at a better place. And the thing that most people have to think about, and I'll say it this way, and if you're a trader, you absolutely know I'm telling you the truth. We get into a trade, we had no idea that this trade here, for example, it was an okay position at the time. It tried to break the top. If it broke the top, this one would have got out in profit. And it was probably very close to getting out into profit when it hit a high. We never know when this is going to happen or when this is going to happen, right? We don't know. And so the thing that we can say is that when the market tells us what it wants to do, and this is the power of being a position trader using money management. When the market tells us what it wants to do, oh, we want to go up, or no, we want to go down. Now, as a position trader, I can adjust my position, right, to match what the market wants to do. Every other thing, day trader, swing trader, every other way of trading, we're trying to come to the market with a preset desire, hope. I used to call it hopium for a lot of
hopium.
traders.
Yes,
You
yes.
have a hopium that the market's going to do X, and when it doesn't, you have no alternative. You have no way to adjust your mindset other than getting out of the trade and trying to take another trade. Here, we say, no, we can adjust our mindset through money management to match what the market is trying to do. And in some cases, we're more like a swing trader that way, meaning that we can be in some trades for longer periods, but we position ourselves where we essentially don't believe in taking losses, right?
Yeah.
And so as long as we don't overtrade, Deb, and I keep saying that on all of these calls, most important thing is not to be in too heavy, too high,
Yeah.
because then I can't manage my position.
Right. If that trade on top was probably about 50, you generally
Yeah.
trade
Yeah.
50 to $75 on
And
your original trades.
yeah.
If that had been, if you had decided right then to, if you were trading $300 for every trade, now you have $300 at the top. If you wanted to cost average that, it makes the most sense to match
You
your
have to.
top, right?
Yeah.
It
Yeah,
you
you
have
have to get the advantage of buying more tokens deeper. If you
to
do
because
less, then you're going to get the same amount and you're not going to get the advantage.
exactly. So now you're talking about 300 or $600 in the trade just for your first cost average. The market
Mm.
continues to drop. That's another 300.
Yeah.
That's $900 in one trade.
One
If
grid line.
in one grid line. Yeah. If you don't have thousands of dollars to put into you, if you want to trade with those kinds of trades, fantastic. But you said it last time on the call, that $300 trade has to be a small percentage of your entire account that you're
Correct.
trading. If that is the majority of your account, then you are way over trading and you
Correct.
really
It
can't do that.
it's just percentages. When we talk about, an account making 100% or 200%, like, a lot of the accounts are doing, they go, well, how much money did they make? Well, it's not, that's not the question. The question really is, what was the return on the account and how much money do I have to trade? Because some of the traders have $100,000 to trade with, and some of them only have $1,000 to trade with. They're both getting, if they're trading correctly, they're getting the same ROI, but just on a different account
Investment,
size.
right?
Right.
Return on investment. It depends on the investment. What,
Right.
right? But the percentage wise, it's the same thing. Yeah, and learning not to overtrade your account is a skill. I really I believe it.
Yeah.
Because you all, even as even as somebody who's looking at these charts and trading on a regular basis, you still every once in a while, and I'm going to say it's not every once in a while, I'm going to say it's a lot of times, you just know that you know that you know that you know that is the lowest we're going right there. I'm just going to go ahead and
Put it
buy,
all in.
put it all in right now.
Yeah.
No,
Yeah.
not an all-in kind of a gal anymore, but definitely I
There
still
was a
have
day in your past.
but I still get that feeling even today. I still get that feeling that, oh, this is it. Look at that. That's the bottom of the market.
Yeah.
I
Eh,
know better than to go all in on that trade, but my brain is still thinking, because I know this coin. I watch this
Yeah.
coin all the time. I know this coin. Guys,
Right.
you
Everybody that tells me they know it, the worst thing that you can do to yourself in trading is lie to yourself, right? And here's how the lie goes, right? I knew that was the bottom and I should have got in,
yeah,
or I knew that was the top and I should have got out. And those are the ones that you remember. But the ones that your brain loves to forget is the time that you knew it was the bottom and you did get in and it wasn't the bottom.
yeah.
We have a tendency to gloss over those because I think it's maybe emotionally hard or painful, Deb.
It is painful. Yes.
But we forget those, right?
Uh-huh.
And everybody is a genius trader, right? Everybody knows where the bottoms and tops are, and a lot of the guys that are doing YouTubes, I hear them talk, oh yeah, this is a parabolic whatever, and they go through all of their analysis, and we could do the same thing, but that's really not the key, right? It's good to do analysis. It's good to know where the swing lows and the swing highs and the barriers are, understanding what the volume is doing in the market. All of that's important because it helps you or helps us understand where a good entry is. Does it help us understand where the best entry is? Well, sometimes it helps us find the bottoms. It found the bottom here and it finds the bottom here and it found the bottom here and it did okay here. Yeah, I mean, those are good, but that's not the key to success. The key to success is overall trade skills, overall money management skills to constantly be in a winning position.
Yeah.
That's the game. So
Yeah.
so
Going
go
back
ahead.
real quick, going back to the beginning of the call when we were talking about just taking the loss, just you got in too high, the market went down and you take that loss. Those also
Let's count them, Deb.
it escapes your
Yeah.
memory. You don't
Well,
remember that
this
because as soon as you win, you make
yeah.
a trade that's a win, you don't remember that time that you. So when you, just like you said, like 99% of traders don't actually make anything because they forget, just like you were saying, our brains just let it go all the times that you did something really dumb and you lost.
Yeah.
And if you're only counting your wins, you don't realize you've actually lost.
Oh yeah. And it's the death of a trader. It really is the death of a trader. Deb, let's do something. You got a pencil or something there?
Yes, I do.
Okay, let's do this, guys. This will be fun to do. I'm going to count the trades that would have been losses. I've got this first trade, Deb, would have been a loss. It went deep before it went up.
Yep.
Second trade would have been a loss. Third trade would have been a loss. Fourth trade would have been a loss. Fifth trade, sixth trade would have been a loss.
I feel
Okay,
like
so
you're
that's one,
counting
two, three,
things.
4, 5, 6 trades that would have been losses that were all wins. Okay. One trade would have been a win. Okay, this one would have won. Okay. Two more trades that would have been losses before they became wins. This trade was a win. So another one that was just a win. Another one that was just a win. one more that was just a win, one more that was just a win.
This is nSights getting you in at great spots.
Yeah. Here's another one that was a loss. Another one that was a loss.
Would have been a
Would have
loss.
been a loss.
Mhm.
And another one that was a win. So how many losses to how many
That last
wins
one
did I
would have
have?
been that
It
last
was a
one would
win.
have been a win.
It was a win. It
It
did
went
win.
down. It wouldn't have, you
Well,
wouldn't
how
have had to
far
stop
down?
out.
That's a good question. I didn't measure how far down it went. That's a really fair question, Deb.
I only asked the fair ones.
Yeah, and I appreciate that about you, and so does everybody else. It would have been a loss. So it's another
Yeah,
loss.
okay.
And hang on, this one probably would have been a loss. Hang on. You asked a very valid question. I didn't think about just a stop loss. That's definitely a loss. So two more of them would have been losses.
Okay, so take 2 out of the win column.
Yep. Two, and maybe let's check
3,
this one here. Very,
4.
very astute of you. Another
Because
loss.
I'm a
Another
student
loss.
of
Three out of
you.
three out of them.
Okay.
Three.
3. All right, are you ready for the stats?
I'm scared now.
We
Yeah.
have 14 trades would have been a loss, and we have 3 trades that would have won.
See, and that's what traders go through. And all of these are okay. I mean, this one's on a bottom. This is on a kind of a bottom area. They're all within reasonable areas. That these two are right in a channel bottom, off of this swing low.
Yeah,
So they're not bad trades that were losses. And this is what happens to traders. They're trading the barriers, they're trading the volume, they're trading whatever, they're trading MACD, they're trading moving average crosses. I don't care what they're doing. They end up with a larger loss number versus a larger win ratio because they have to set stop losses. But when you go into a different mindset that you own an asset and you're a position trader, you're going to position your trades and then you're going to manage those positions through money management. It changes the game. And so, Deb, we have one here that I noticed while we were going through this that I have not managed yet. I
yeah.
haven't done any money management. And again, on this account, I do things that I wouldn't normally do. It's still low. The question is it low enough for me to think about managing it? It's down 20%. Okay. So yeah, 15, 20%, I'd like to do that. I'd like to do it, when it's at the bottom, but I wasn't here teaching at that time, so I didn't get to do that. So we can manage this position, okay,
I love
and
it.
move it down closer to the market like we've done these others. And we'll watch the market. This one's already been managed. We might add a little bit to that one and move it down again, and get it closer to the market. So
That
maybe
one's
we'll do
already
those
got,
two.
that one, well, the one on the left has already got 2
Two.
trades against it. So
Yeah.
it takes it's
It
going to take
takes
a little
more.
bit, well, but it's
And
going to
well,
take a
let us
little bit
show
more.
that. Let's
It's
show
going to
that.
take, right. And the part I want you to show them is the analysis that you need to go through to make sure it's going to be an appropriate, right? Because not everything is an appropriate move, right?
Yeah.
So there's a little
So
bit of analysis you want to do, especially when you've already cost averaged twice.
right.
Um,
And
you want to make sure that
I
it's
have a
gonna-
spreadsheet that I use, Deb, and I won't bring that on the call. It takes all of your cost averages and it's a weighted spreadsheet, and we'll eventually develop that in here so that you can key in the amount that you want to trade and it'll calculate for you how far it's going to move it down. And that's important to do.
yeah,
But especially when you have other trades already in, you're going to put additional amount in and it's only going to move a little bit.
right.
And you
So you want
think,
to measure your bang for your buck, right?
right, right. And so we'll show that today. I'll put the same amount in this trade and we'll see how far it drops. Okay. We'll mark the number at 3352, Deb, on this one, and mark the number on this one at 30.98. Okay, and we'll just see, see how far they move, with the amount that I put in.
Okay,
Okay,
I think that's
so
fair.
I'm going to go down here. This is the one that doesn't have any additional trades yet. It only has $50 in it. And the other one that we're looking at has 250 in. I said 250 was my last guess, so I was right on with that. But I thought 150 maybe to start, but we're 250 into that, and we'll put another 100 on here, and I'll put 100 on this one, and let's see the drop. Let's just see what it does. Okay.
Let's see.
All right. So I can see the filled price was 3104. Is that what we're seeing here?
So Brendan had a really good comment.
Yeah,
There's lots
3104.
lots of communication going on our live today. Thank you guys for joining and being a part of it. So Brendan said, I try to never trade what I know. I trade what the analysis tells me.
That's the perfect statement, buddy. And
Absolutely.
I've told you guys, Brendan's my trading buddy or partner for over almost 20 years now, and he is a phenomenal trader. So, and that is the right answer. Yeah, you never want to trade what you want. You want to trade what the market's telling you, because, and Brendan and I both say this, basically the market doesn't care what you want, right? It doesn't even know you exist other than you're putting in a small trade. You're part of the greater part of the market, right? But you're just one dot among many, many thousands of traders, right? So unless you're trading, you know, millions or billions of dollars, you're not going to affect the market. So the market doesn't care what you think or what you want. It's very indifferent. It's a very cold system when it comes to that, Deb. It's not fuzzy.
What about when a friend of a friend gives you a hot tip on
Oh,
a
then that's
new
different.
on
That's
a new
really
token
different.
that's coming out
Yeah,
and you're going to be
yeah,
one of the first ones in if you just do it right now. If you just jump
yeah,
in right now, you'll be one of the first ones.
yeah. That's
Those,
really different.
should we skip the analysis piece and just jump right in, do you think? Because
Never. And not even if it's us telling you. And so there's an advantage is sometimes trading with companies like us, where we're helping companies like Otherverse develop some of their front end stuff and helping with tokenomics and a lot of stuff when Otherverse is coming out with their tokens. In fact, I've worked all this week on getting Solana and getting ready to do their token launch, which will happen the first part of next week. Now, I know Brian Schuster. I know Otherverse. I know the project. I know what they've developed. So, you know, it's different. You should still do all of your due diligence and work on understanding who Brian Schuster is and understanding his team and understanding the patents they have on the metaverse, which is like 80 patents on on the metaverse, right?
yeah,
You should go out and look at the lawsuit that they have against Fortnite, and that they've won 9 of their 10 pre-trial motions,
yeah,
right?
Epic Games, right? Epic
Epic
Games.
Games.
Yeah,
You should know all of that
yeah,
because that's the important stuff to know about the token, right?
yeah.
And so when somebody like us brings a token to the table and we say, here's what we know about the token, it's different than your buddy that you're having lunch with says, hey, I heard somebody on YouTube say, this was a hot token. And so there's a
So
real
know
difference.
your
And
source.
yeah, know your
Right,
source, know their background, and know their connection with what's going on. So yeah. So in some ways, Deb, yeah, you're right on. You need, and still that's part of your due diligence is knowing who's telling you what, right?
right.
So
And we're coming full circle back to this call because this call is teaching you how to do that analysis, right? We're not ever giving any kind of trading advice, and past performance is never indicative of future results. Always keep that in mind and never trade more than you can afford to lose
right.
ever, right? Um,
And we're not financial advisors.
We're not financial advisors, but what we are doing is teaching you how to do that analysis, teaching you why to do that
Yeah,
analysis, teaching you to use your brain and go look some stuff up before you jump into anything, right?
right.
Yeah.
All right, so let's add us confirm that this is the one that we're looking for. I'm going to hit the chart view here. It's going to come up and it's going to get rid of all the lines, and it's, in fact, that is the dot that we're looking for around the 30 price. So let's refresh and let's go do this thing.
Excellent, excellent, excellent. So what we're doing, guys, we're not going to buy a new trade. We are simply adding money to an existing trade by actually buying more tokens at the current price.
Right, and here it is. Okay, that's the one that we're going to do first.
Okay.
So let's go down, and it's showing that it's 22% negative. Okay. And I'm going to go over here. Now I can see I have auto cost averaging off completely on Injective because it's dropped a lot, and I want to potentially, as a trader, manage this myself. Okay, that's one of my options. I could leave it on auto and let the system do everything, but part of my training and teaching you guys what the software does is make it do different things. And so one of the things here is I've turned it all off. Okay. So it dropped a lot and it doesn't have a cost average. So I do want to cost average this one trade. So I click on the three horizontal dots, hit manual trade, and I'm going to do it at current market, and I'm going to do $100. Okay.
While he's popping that $100 in there, I want you to notice that market movement right now says it's 20.41% negative, and net grid line position says it's 22.8% negative. It's more negative on your net because, again, we add the fees into your profitability so that you're always accounting for those. If Doug wants 5% on all of his injective trades, it's going to give you out at 5% plus the fees. Whatever the percentage in fees you paid, it's going to up your percentage that amount so that you make sure that you're getting back what you put in plus your actual profit.
Yeah, given slippage in the market, 99.9% of the time, I'll get out in my profit or better. So
Yeah.
if the market's moving up fast, I'll get a better exit than the 5% that I'm asking for. So it's the price that I want, the amount of money I want to make, or better. Okay.
Yeah.
So, all right, I'm going to do current market. I'm going to do my 2FA here. See if I got that in fast enough. It was about ready to switch over.
Brendan says percentage is the correct metric. Doesn't matter if you're trading pennies or hundreds.
Correct.
Percentage is what matters. Gary Brennan says, we are the house.
We are the house. Oh, it went through. All right. Okay.
Excellent.
Let's measure this one. And injective. Okay, I was 22, now I'm 9.
Okay.
Isn't that beautiful? Look
That
at
is
that.
beautiful.
And let's go look at the dot. I just want to see this beautiful thing.
Yeah, tell me the price your new dot is at.
So our dot was all the way up here, like
Yeah.
Deb said. Now it shows it down here. And I'm roughly at 26.46. Okay. And that was, well, we have the numbers. I was 22 something negative. Now I'm 9.
Yeah.
So I'm 9. You got that other number. So I'm 9.89, Deb. So
Yeah, it was
you can figure
22.
that.
It was 22.8 and now it's at net and now it's 9 point what?
8.9. Okay.
All right.
Okay, now we're going to go do this other one. It's 28.13 negative, Deb.
28.13.
Yes.
Okay.
Okay, and let's go look at its dot. So its dot is just at the bottom of this blue one, and you know, we can use that as a reference point when this moves, and we'll
Yeah,
see
and
how far it moves.
I also have it at, yeah, 33.52 is the price.
Okay. All right, so let's go move this one. Now remember, it's already 250 in. I'll add another 100. I'll be 350 in. And for this small account, that's a lot. Okay. Um, but you know, for teaching purposes, we want to see what it does. I probably wouldn't do this normally. If this was all the money I had to work with in this account, I probably wouldn't do this. It's not, and I tell everybody, if you're trading a $2,000 account, always be willing to double that, have money on the side that's not in it, so that you have a buffer. So don't again max yourself out with the initial amount that you're trading too. Always have resources that you can pull from that's not going to take from the rent or food or you know, for your kids' clothing, whatever, right? It's money that you have that you can trade with, use it for a while, and then take it out and put it back wherever you want to use it, or take a vacation, or
Now,
take your wife out to dinner.
can we see the details on that?
Yes, we can. So I had a total of 5 cost averages. I moved 3 of them out to limit orders or cycle trade, and I'm managing these in a different position. Then I did the 2. I did one at 27 and one at 35, and we can see those 2 black dots. Okay.
And they were $100,
Each.
$100 each. So that's your 250. Your original was $50. Then you put 100 in and 100 more in on that
Right.
trade.
And then move
And that's
these
where we
out
are.
to a different trading system. I taught that and wanted to use them in a different way. So again, I'm not stuck
Right.
in how I manage the money or manage the trade, right? I position the trade and then I manage it, you know, differently. So I didn't want these to keep the grid from being able to close. So I moved them out to, I think, a cycle trade.
Right. Yeah.
We could figure that out on next call. Uh, but I moved them out so they could be traded differently in that cycle trade. It combined the 3 down to 1 trade. And then if I want to add to that trade or cost average that trade individually, I can do that over there and not affect the way that the grid performs.
Yeah.
Okay.
I
So
love that. So
tremendous
many
power,
tools.
tremendous power.
Yeah.
All right. So let's go add a trade. We got 2813 here. I'm going to do the same $100, okay, that I did with the other one at current market. I remember when $100 was a lot of money back in the day, when I was like 18 years old. Okay, so all right, let's do this. Oh, not there. Got to put the F2A down here, Deb. All right, let it roll over. It's right there, rolling over. TikTok, here we go. Okay. You know when I feel the most stressed, Deb?
It's just waiting for the green.
No,
Oh.
when the F2A is about ready to roll over,
Uh,
right? And you're trying to get it in quickly.
that's
It's
funny.
like
I think that affects a lot of people.
it does. I mean it's like, and you got all the time in the world,
I
but
know,
you
and
know,
if it rolls, it's not a
it
big deal.
rolls.
Comes back real quick. Yeah.
It's so
I've
funny.
seen other people stress out on that too. That's one thing that I can relax through.
And there you go. All right, here we go. Ah, successful. Okay.
Success.
All right. So now let's go down and look at that. 20.79.
20.79%.
Okay,
Okay.
so which one dropped the most?
Let's see. 8.13 minus 20.79 is only 7.34%. All right. So your Second trade dropped 7.34% from where it was. Your first one that you didn't have any cost averaging on yet, took full advantage of the market. You dropped 12.91%, almost 13%.
Wow. So that's what we've been talking about. So you get too heavy, too high, it's harder to manage it, right? Now, and then you got to put a lot more in. So if you get too heavy, too high, your options are you got to wait for it to get really deep and then put the money in. You got to be really patient, right? Or just let the trade out and do what it's going to do, right? So, it's not the end of the world if you get in too heavy, too high, but it's not the best, right? So when we look at where we are now, we're right here with that trade. Okay, try to get it more in the, it's close enough. And I told you, let's use the bottom of this blue dot as our reference point. So this is where we were basically, and this is where we are. Okay,
Where is the price? Can you get the exact price?
of this
Yeah. Just hit it right in the center there so I can
about
see.
30.54.
30.54.
Yeah.
All right.
And then this one was up here, and now you can see, let me clear all the lines.
So your first one, you dropped the price by, you dropped it down 4.52 ticks on the price.
Market movement down.
Uh-huh.
Yeah.
4.52 in pricing numbers, right? And
Right.
so the top one, you dropped it down by just 3.
Wow.
The price went down by 3.
Yeah. So we
So
can,
that's a pretty big difference. It's almost double.
yeah, it's huge. And so it just proves is what we've been talking about. And I can now see though through through positioning the trade initially, getting in, getting position, and then using money management, I moved this trade down very, very close to the current market, right? On from an up perspective, from the dotted line here, I'm 6% away from break even,
Yeah.
6.7. Where I was up here, I was 22% away from break even. Big, big, big difference, right?
Huge difference. If this trend, it looks like it's on an upswing right now. If this trend continues, you could sell, this could possibly sell today or tomorrow, or
Right.
and the thing is, you're not just going to get $50 back on that trade. You're going to get
And
$150
profit on 150.
in profit on 150 rather than in profit on 50.
Yeah.
So there's just
Yeah.
so many great ways to think about
Yeah.
our money
And
management.
that $100 I just added, Deb, it doesn't go back to the grid to be used again. That $100 will close back to my mid wallet that
Right.
I have, and I could use it somewhere else when I want to.
Exactly.
So,
Oh, that's brilliant. What a great lesson today.
so
Um,
we defined who we were,
we
Deb.
defined who we were today.
Yeah.
We
Yeah.
we got to make sure that Akhtar knows that
He was
that
part of this, part of a new movement.
he really did something good today. Thank you everybody for joining. We have Candace, Gary is out there. We've got Brendan, of course. Perry is here. Thank you everybody who joined us live today. If you're looking for us, you can find us on Discord. You can go to this to the details on this live and click directly into Discord now. So go join us over there and be on our call tomorrow morning where you can actually join us on Zoom. You can ask any questions that you want, and Doug is right here at your fingertips. We talk about this all the time, you guys. We are real people trading real money, getting real results. So we'd love to have you join us so that you can partake in all of the exciting things we have going on here. Doug, excellent training today. Thank you so much for doing that. And I'm glad that we both had that aha moment today
Yeah.
where we really did define who we are. We are position traders.
Yeah.
I love that.
I feel a little more fulfilled now, Deb.
I do too. Really do.
I
Maybe
can't wait to go tell my wife I know who I am now.
right. Well, and that you said it earlier, mindset
Right.
is everything when it comes to training, right? And I guess knowing who we are is just going to help in that mindset,
Oh,
right?
I think that's important. We're teasing about it, but it's actually very important,
It's
right?
the most important.
Because it shifts the gears in a way that allows everything to now start falling into sync, right?
Yes.
And
Yes.
I think that, again, we're having fun with it, but not to downplay anything in that it is critical to know who you are, what you are in trading, because that then mandates
Mhm.
how you respond and what you're going to do. So yeah, it's very important.
Mindset matters. And so for any of one of you who have come to me and said, "Oh wow, I bought this coin and it's awesome, but oh, I bought it high, it's really dropping." You'll be able to take what I say and actually not have it completely confuse you. And that would be, "Ooh, excellent. Keep an eye on it and buy some more."
Right.
If it's a
Or
if it's a good token, guys, if it's a good token and you've done the research and you believe in that coin.
yeah, and if you got suckered in because your buddy told you to buy something and it's no good, then next week, Deb, we'll talk about your option of selling that, documenting the loss in insights, and then converting it to a coin that can now take that negative position and trade it back to a positive position so that you never end up negative.
Oh, that's just good stuff right there.
Yeah. So let's do that next week, maybe.
So many tools at our fingertips.
Yeah.
It's
Well,
just a
guys,
fun
thank
place
you,
to be.
everybody. Appreciate you taking the time. Deb, thank you. Everybody have a great Friday. Hopefully, we'll see some of you tomorrow. If not, have a great weekend. Deb, again, thank you so much.
Thank you so much, Doug. Bye, everyone.